Hello traders, Day Trader Matt here with businesswithtrading.com, doing an E-mini trading room recap for the 8th of December, Monday. And today was another great day in the markets. You can see we took 2 trades and pulled 4.5 points out of the market. We had a nice gap down for the market open. We ended up taking a short up here, and the market came all the way down a little over 3 points. We ended up taking profits right up here. The market came down a little more, came up, and this is where it started getting a little bit choppy. Then it bought up, came sideways, bought up again, came sideways, and we were short right in here, and we were just waiting on the market to see what it would do. Eventually, we hung out a few minutes afterwards. Eventually, it started to sell off. I was looking for it to come into this region. I was looking for this this whole time here. It eventually came into this region. Being 10 after, we ended up taking profits, and then it just broke down a lot. It was very, very interesting to actually see that. And when we were closing the room, I was doing my analysis, and that's what I was talking about. If it did sell off, what we were looking for. And interestingly enough, it went down, it hit the target, and a little bit more. So that was actually quite interesting to see. Obviously off the chart here, but it's always fun to be able to look at the market and say, well, it's doing this, this is its target, it's not going above this price, bam. And as we were looking at things, we were actually able to look at a very, very nice trade setup. Obviously, I'm not including those results in today because we were closing the room, but if you guys stuck around and took that trade, you definitely made out like a bandit. You made really, really good profit, compared to what you were risking. So anyway, today was a nice day, 4.5 points, and then we had a little bonus trade at the end. If anybody took that, congratulations on that as well. And really today is one of those days where you can look at it and say, it's probably a good day not to even trade, just to take off. That's not what we do here. We trade every single day unless it's like a holiday or around the holiday, like usually like the week of Christmas or something like that. Volatility is almost dead. So anyway, it's a good day to look at it and say, you really don't want to be aggressive one way or the other. It traded sideways basically, we could say from 9:45 all the way to 12:05, and then it started breaking down after that. So it's not really a day that you want to be overly aggressive. I was looking at this, if it came down a little more, maybe to get long, but it didn't. It held this, moved up a little bit, and then it started kind of chopping around a little bit. I know some people that were actually trying to take this breakout here and ended up, not having any luck at all. One of my friends I know, he took a breakout here. Not anybody in the room. One of my trading friends took a breakout here, ended up getting out, and then going short, and did very, very, very well. I'm not sure where he actually went short. I know he got long up here, so obviously he took a loss on that. I think he shorted somewhere down here, so that's what trading's all about. I wanted to show that example just because a lot of new traders think that they need to always make money with every single trade. And one of the first guys that I trained in trading, which was many, many years ago, I had 4 students originally, and then that's what spawned out a business with trading and everything like that. 3 of them were doing really well. They grasped everything. The other one didn't really want to play stops. because the theory was, if I place a stop, I get stopped out. And usually I get stopped out and then the market goes in my favor. So if I don't place a stop, I won't get stopped out, and then when the market goes in my favor, I'll be able to make that money. The only downside to that is those times when you would get stopped out and the market would keep going. That's what destroys your account. So I think today is a good day to actually discuss something like that. Making sure you actually have a stop, that you're actually managing your risk, rather than letting it just go, is very, very important to the longevity of your trading career. If you want to be around year after year, you want to make it to the professional ranks, being able to have a stop, but have a logical stop, is very important. You can't say, hypothetically, I'm going to get long right here. Let's just say it here. It makes a little more sense. I'm going to get long right here at 2.5. I'm going to place my stop at 1.5, and because I have a 1.5, because I have a 1 point stop, I'm going for 2 points, so I'm going for 4.5. In hindsight, that was a great trade. But if you're making your reward just 2 times your risk without actually looking at where price can go, that can actually get you into trouble. Let's say, for example, you were getting long here, and you were like, I like this trade. I'm going to get long a tick above this at 275. Stop at 175. So you have a 2 point target. So 275, 475. Your target never gets hit, and then boom, you get taken out. You have to look at the context of the market, and that's what I do. That's what I teach. Look at the context of the market, because you might see a setup, but it might not be worth taking. That's a big part of what I teach. You see your setup, the context of the market. Okay, it looks good. We're looking for the market to come up to a certain area, and that's basically what we're looking for. I've been getting some questions from different people asking me about market profile and stuff like that. I don't use it. For me, it really doesn't help me one bit. Some people use it, and that's fine. There are a myriad ways of trading. But to find support and resistance levels, you don't need it, because that's what most people use it for. You can look at a chart and just pick out the main areas. I can look at a chart and pick out the main areas right away. And it should be something really easy. You look at a chart, bam, 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 there's 4 big levels, 6 big levels, whatever it is, depending on what time frame you're looking at. And then there you go. Those are your big areas, and then you have to watch price to see where exactly it's going to. That's one thing that I do. I teach minimalism, basically minimalism trading, having the least amount of stuff on your charts as possible, while minimizing your risk equals good things. If you would like an equation for the day, that's what it would be. Having the least amount of crap on your chart. And I've talked about it before. The conscious mind can only hold a certain amount of information at any one time. You give it too much information, and it's going to get confused a little bit. That's why you see some people, and smart people, that are like, I left my keys, I did this, what am I thinking? I lost myself in this conversation. Because they just have too much stuff in their conscious mind. They're overwhelmed. And that's what trading can do if you're watching too much stuff. You have, 10 indicators on your chart that mostly contradict each other. It doesn't really help you at all. I see some people, they're like, well, the MACD is doing this, the Cass 6 is doing this, RSI is doing that. What do I do? It's like, well, just take that crap off your chart and then learn how to trade from there. So anyway, hopefully that made sense what I was talking about. I think I got off on a little bit of a tangent, but I think it's good information. I wanted to talk about that today. So you can leave all comments below the video. You can also email me directly if you choose to. support@abusinesswithtrading.com. No such thing as a dumb question, only the question that's not asked. So ask away if you have a question. Of course, comments and feedback are welcome also. With that, have an awesome night, and I'll see you back here in the markets. Thank you.